Imagine you're buying a coffee shop. On paper, the furniture, the espresso machine, and the building add up to $200,000. But this cafe is always buzzing. Customers love the barista who remembers their names. The vibe feels special, and people say, "This is our spot." Suddenly, you're willing to pay $300,000. That extra $100,000 isn't for the chairs or the coffee machine. It's for reputation, loyalty, and trust. That invisible value is called goodwill. Goodwill is an intangible asset. It's not physical, you can't touch it, but it adds real value. Just like that cafe's charm, goodwill is everything that makes a company special beyond its equipment and property. A strong brand name, loyal customers, skilled employees and managers, good relationships with clients and staff, unique technology or innovation. Goodwill shows up most clearly when one company buys another. If the purchase price is higher than the value of the assets, that extra amount is recorded as goodwill. To see how this works in numbers, let's take an example. Imagine Company X. It's being bought for $50 million. Its net assets are worth $40 million. It makes an average profit of $3 million a year. It has $20 million in capital employed, and will use a normal return rate of 10%, with a 5-year horizon for goodwill. Purchase method. The most straightforward. Purchase price minus net assets. 50 million minus 40 million equals 10 million in goodwill. Average profit method. We take average profit and multiply by years purchase. 3 million times 5 years equals 15 million goodwill. Super profit method. Normal profit is capital employed times normal return. 20 million times 10% equals 2 million. The company makes 3 million, so super profit equals 1 million. Multiply by 5 years, goodwill equals 5 million. Capitalization of super profits. Take that 1 million super profit, divide by 10%. That's 10 million goodwill. Capitalization of average profits. Average profit is 3 million. Divide by 10% equals 30 million. Subtract 20 million capital employed equals 10 million goodwill. As you can see, depending on the method, goodwill ranges from as low as 5 million to as high as 15 million. That's why the method you choose matters. Accounting rules stick to the purchase method, but in negotiations or brand-heavy businesses, like our cafe example, or global brands, super profit and market-based methods may carry more weight. So, goodwill is the hidden value that makes a company worth more than the sum of its parts. Whether it's a corner cafe everyone loves, or a global brand like Coca-Cola, goodwill is built on reputation, loyalty, and human talent. And depending on how you calculate it, you might get very different numbers. This is Gavril Talks Business. If this breakdown helped you understand goodwill, give the video a like, subscribe for more business explainers, and drop a comment. Which method do you think is the fairest way to value goodwill?